Well, for more perspective on cryptocurrencies, I'm joined live via Skype by Mark Dukas. He's a crypto analyst and at Bitcoin Live and the founder of BitcoinSmartMoney.com. Welcome back to the show.
Thanks for having me.
So quite the day, starting off, as we saw, with that change in policy in China. What's your reaction to that change?
So my reaction to that immediately is fear, uncertainty, and doubt. And that's what causes cascading of price action like we saw over the past 24 hours and even over the past few weeks as prices dipped from 64,000 now down to 36,000 and change. And I'm expecting us to see this continued volatility. But this is now the third or fourth large announcement from China about crypto exchanges and Bitcoin trading. So that's kind of what I thought when I first saw the news this morning when I woke up.
Now, we do know that cryptocurrencies do have something of a history when it comes to volatility. So why are Chinese policymakers making this change now?
So I think one of the changes, the reason why it's becoming more of something that we need to discuss is, look, there is a lot of growth and influx of money that's coming into this ecosystem. And with that, you have wild swings in people's net worth, whether it's to the upside or the downside. And when you have that, with Chinese officials and how they monitor things, it's sometimes to take a step back before you can take that 2 steps forward. So I think that we give China a really hard time for putting this information out there and holding back some of the things that happen within the crypto industry. But I think what it allows, actually, if you step back and look at it from a long-term point of view, it allows for the organization of how this is going to grow from $1 trillion asset class to 10 trillion.
Now, a lot of governments also have questions. So what does this shift signal for cryptocurrencies in general, as well as other governments' potential regulatory changes?
It signals this. One, we have a new ecosystem and financial payment platform that needs to have some more clarification and regulation. That is good. And you know why? Because that allows us to know that, look, Bitcoin has made it. Ethereum has made it. It's here to stay. It's not going away. Did it drop a drastic amount? Yes, it did, but that's part of the story of Bitcoin and how its volatility unfolds, and that's been happening over a 10-year period, and then upward volatility is continuing to happen. Yes, we did have to drop down from 65 to 30,000, but we also had to move up from 10,000 to now, let's say, 30,000.
So then, with Bitcoin being a decentralized currency or asset, depending on how it's classified, how effective can bans and restrictions by individual countries be?
So they're only as good as the platform that they work with. So when you have digital currency come into a country, yes, you don't know that it's there yet, but when that digital coin tries to hit your account for dollars or yuan or euros or whatever it may be, that's when the regulation and the knowing of crypto being in your monetary system hits the country's ecosystem. So with that in mind, that's why we need this regulation, because we've seen such growth in this ecosystem, and there's a lot harder things to monitor. And when you have things that are digital and they can be slightly obfuscated by tracking them in different ways and the way that these coins are minted in mind, that this is important. So I think that the FUD that's coming from this is a little bit overstated, because China could take a step back tomorrow and say, this is the guidelines that we're looking for, and price could now pump 10%, 20%, 30%. So I think we have to not overanalyze everything and just kind of let the regulations unfold as the years progress.
Now, speaking of overanalyzing, for better or worse, Elon Musk seems to have a lot of sway in the crypto market, changing his mind about Tesla accepting Bitcoin, raising hopes about Dogecoin. Talk about his relationship to the crypto market and the consequences of having that sort of influence.
So he definitely does have a lot of power, and people listen to what they see. And there's these bots that track Elon's tweets and the news that go on. And when something happens, things will be bought and sold drastically. I mean, there was a humongous price change from when he made that announcement on Twitter that he had to go back on and clarify, hey, Tesla has actually not sold any Bitcoin. And I think that we're just putting a little bit too much onus into every word that Elon says, or every word that the PBOC says, or every word that whoever may say. Look, this is new and it's growing, and that's kind of the ups and downs that you have when you go through something like this.
And I mean, it is a lot for people to deal with. We have some crypto investors that are in this for the long haul. You have Kathy Wood of ARK Investment Management, still bullish on Bitcoin, believing it will hit 500,000. Others like Warren Buffett were never interested and vowed never to own any. What should people make of all these predictions?
People should make of all these predictions that they're just speculative guesses. So somebody's going to be right, and then we're going to hang our hat on that person that guesses, and that's right. And also, if you make enough guesses, you'll eventually be right. So that's one of the things to take note of. What is it, the story of Bitcoin and crypto really tell you and unfold? And it tells us that our monetary system, whatever country you may be in, is in the digital realm. So that's why this is unfolding, and it's going at a very, very intense speed. So that's why you have the hacks that we had. We've had Binance Smart Chain hacked twice in the past few days. So that's why these growth pains do happen.
All right, well, thank you. Always good to have you. Mark Dukas there, crypto analyst at Bitcoin Live and the founder of BitcoinSmartMoney.com.